Hello, very good morning. The US stock market was lackluster yesterday, but the three major US benchmark stock indices, the Dow Jones Industrial Average, the S&P 500, and the Nasdaq 100, despite having a negative performance, they managed to held above their respective supports level. Asia Pacific stock indices continues to outperform, particularly on the Hang Seng indices, reinforced by the outperformance of several China big tech stocks due to DeepSeek AI revamp model. The US dollar continues to remain weak after the ISM manufacturing PMI data for US came in worse than expected for the month of November. Very good morning to all. I'm Kelvin here. Welcome back to your daily dose of market insights. Today will be Tuesday, the 2nd of December 2025. So as usual, before we kickstart our gist of the daily dose, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exit deposits. This presentation is for general information purposes and is not investment advice. Past information is not representative of future results. All right, so as usual, before we jump straight into today's, I would say toned down daily dose of market insights, because I only covered the chart of the day for the intraday technical outlook. Let's have a recap what has taken shape yesterday in terms of the intraday performance of the broad-based cross asset classes and some interesting key levels to watch in relation to the release of their respective news flow and key economic data releases. So yesterday, let me touch with the key economic data releases first. So yesterday, Monday is it was a rather quiet session, and also it also came on the backdrop of a lower thinner liquidity trading environment, typically after the ex-post Thanksgiving holiday that has taken shape on Thursday and Friday in the US markets. So let me share with you guys what are the key data over here that came in that was released yesterday. Pardon me. So yesterday was this ISM manufacturing PMI data that was released. So we know that ISM manufacturing PMI data is not so really that key for the US economy, because in the manufacturing sector, it's not a key driver of US economic growth. So the focus will be more on the ISM services PMI that is due on this Wednesday. But nevertheless, they still do have a sentiment feedback loop impact on the global markets, especially if numbers came in above or below expectation. So the ISM manufacturing PMI in the US continues to contract. That means, i.e., manufacturing activities is on the decline in the US. So it came in at 48.2 from the previous month of 48.7 that was recorded in the month of October, and market is expecting 48.6. So it came in way below expectation. So if you look at the trend of the ISM services PMI, very clearly it's inching downwards. And if you look at the 10-year trend, right, it's hovering below the 50 level mark since March this year. All right, since March this year. So it's about what March, April, May, June, July, August, September, October, November. So 9 consecutive months of contractionary mode in the manufacturing services activity in the US. So we know that the ISM manufacturing PMI, on top of the headline PMI, manufacturing PMI, we call it a level, they do also have some subcomponents level that is very important to look out for, especially given the state of softness in the US labor market. So the ISM manufacturing employment subcomponent for November also continues to contract further from 46 in the previous month of October. It came in at 44. Right, so you look at the trend. So hiring activities or hiring prospects in the manufacturing sectors or the manufacturing industry in the US continues its decline over here. All right, so maybe let me put it in line so that you guys could have a better, it's going to shape a series of lower high and lower low. And most importantly, the situation of manufacturing prices. So manufacturing prices, think is as a subcomponent that give us a gauge of the cost of doing businesses for the manufacturing services in a manufacturing industry or the manufacturing related companies in US. So it continues to be on the rise. That means input costs or cost of doing business for the manufacturing sector in the US is on the rise, and it's going to hit above the 50 level mark, and it came in at 58.5, above 58 figure that was being penciled in the previous month, October, but slightly below expectation of 59.5. So you look at the trend over here, 10-year trend, let's put it in line. All right, it continues to trend upwards since 2023. All right, so they're still in a major uptrending phase. So what it means that over here is that the stagflation risk is still pretty much intact for the manufacturing services or industry in the US. So that created a bit of negative feedback loop back into the US stock market. So the US stock market yesterday movement was rather lackluster. So all four of them closed in the red. The SPX down by negative 0.5%, the Nasdaq down negative 0.36%, pardon me. The Dow Jones down negative 0.9%. The Russell 2000 fared the worst, down negative 1.25%, given the fact that the small cap company tends to have a much more highly levered balance sheet over here. So but the key story over here is that the fall, it didn't actually fall that much. I mean, because and it was being supported. Later I'll show the chart of the intraday chart of the Dow Jones, the S&P, and the Nasdaq still holding above our key pivotal support level. Why? Because market participants continue to actually have a dovish view that the Fed has a high chance of cutting the we call it embarking a third interest rate cut on the next meeting, which is next week on the 10th of December. A high chance of 87.6%. Okay, so that's very close to 90% that the Fed is likely to cut rates by another 25 basis point to bring the current Fed funds rate from 3.75% to 4% down to 3.5% to 3.75%. So that being said, it allows the Dow Jones Industrial Average, the Nasdaq 100 and the S&P to remain on support level. So why the Dow Jones fared the weakest yesterday is because if you look at the heat map of the S&P 500, we see a dip C rate in the financials and in the healthcare. So given the fact that there are actually two component stocks, Goldman Sachs and United Healthcare, form a significant weightage in the Dow Jones Industrial Average, and also the industrial stocks also came in worse than the S&P 500 in terms of the performance yesterday, particularly Caterpillar as well, which is the one of the heavy weightage component stock in the Dow Jones. And yesterday, why the S&P 500 and the Nasdaq 100 managed to have a better performance over the Dow Jones is thanks to Apple that managed to close positively at 1.5%, and Nvidia. Two of them has significant weightage on the S&P 500 and the Nasdaq 100, and Nvidia is up by 1.65% due to positive news flows pertaining to Nvidia yesterday, where Nvidia announced a strategic, we call it investment in this Synopsys Inc. as part of a broader engineering and design tie-up aiming to infuse its AI computing technology into more industry. So Nvidia invested 2 billion in this Synopsys over here. All right, so Synopsys is actually a software maker, so Nvidia is more like a hardware maker. So there's a potential strategic tie-up between these two companies. So that created a positive feedback loop into the Nvidia share price yesterday that actually explained it's causing the S&P 500 and the Nasdaq 100 to actually outperform. So now back to the charts of the S&P 500, the Nasdaq 100, as well as the Dow Jones. So very quickly, let me share with you the charts over here. Let me open up the charts. All right. Okay, so what I could see is that this is the S&P 500. So the S&P 500 continues to hold above the pivotal support that we have yesterday at 6,780, 6,760. So first resistance level to watch will be on last Friday. We call it high, which was the high that is being seen during the shorter trading session on last Friday. And what's interesting over here is that at the start of yesterday's US session, the market rallied and printed a high of 6,847, which is very close to 6,853 over here before the market did a sell-off at the last hour of the US session yesterday. Then thereafter, it traded sideways right now throughout the Asia session. So what you could see over here is that the first resistance still remains the same, 6,853, with the second resistance coming in at 6,880, which is a very important upside trigger level in order for the bulls to gain a upper hand, or in order for the bulls to have a higher probability that the low of the 21st of November is a very clear bullish reversal low that kickstart a new impulsive upmove sequence to allow the S&P 500 to stage a higher high and potentially a fresh all-time high above the current all-time high of 6,930 that was printed on 30th of October this year. So why 6,880 is very important, because 6,880, this level here was rejected by the bulls not only one time, 3 times. First time on 31st of October, second time on 3rd of November, and the last third time on the 12th of November before kicking start that rather steep multi-day decline. And this steep multi-day decline coincided with key risk event, which is the AI bubble fails, and as well as one of the major key component stock of the S&P 500 that is having a very significant influence will be the exposed earnings lackluster share price reaction of NVIDIA that created the last leg down of sell-off on the 20th of November. All right, so level still remains the same, still maintaining that bullish bias as long as 6,780/6,760 short-term pivotal support on the SPX 500 holds. Now, next will be the Nasdaq 100, very similar as well. So Nasdaq 100 very clearly, yesterday it banked off exactly at our first resistance level at 25,455 over here. All right, before shaping that last hour sell-off during the last hour sell-off of yesterday's US session, and did a bounce off the 20-day moving average, which is very close to our pivotal support level that I highlighted yesterday. So no change for sure. Key level still remains the same, 25,080, that managed to induce the bullish, minor bullish reversal that takes shape at the start of the US session yesterday. So as long as 25,080 short-term pivotal support holds, still maintain that bullish bias on the Nasdaq 100. First resistance level to watch for today will be 25,455. Above it, potentially seek out a retest of this all-important upside trigger level of 25,760. Very similar to this 25,760 is in parallel with the S&P 500 6,880. So why is it important? Why is it in parallel? So if you look at the price reaction at the 25,760, tested 3 times, that kept the bulls in check. 4th of November, 6th of November, and lastly will be the 12th of November that kickstart that rather steep multi-day sell-off, and particularly the last leg of this sell-off was induced by this AI juggernaut NVIDIA exposed earnings lackluster price reaction on the 20th of November and 21st of November. And in order for it to have a high probability that the low that was seen on 21st of November, Friday, is a key major bullish reversal low, the 25,760 got to surpass. So surpassing of 25,760 will increase the probability that the Nasdaq 100 is on en route towards a fresh bullish impulsive upmove sequence that could potentially take us to higher high and even potentially surpass the current all-time high that was printed on 30th of October at this 26,270 level. All right, so this is the current all-time high level over here. Okay, 27,288 over here. All right, so that's for the Nasdaq 100. Quickly will be the Dow Jones Industrial Average. So the Dow Jones the US Wall Street 30 or the Dow Jones Industrial Average also tested the first resistance level at almost tested the first resistance level at 4. Okay, so this is the US Wall Street 30, which is the Dow Jones representing the Dow Jones Industrial Average. So also tested the very closely the 47,750 level, which I highlighted yesterday. That was my first resistance level to watch. So yesterday it printed an intraday high of 47,685 before selling off. All right, so but still managed to hold above the 20-day moving average, which is very closely to our short-term pivotal support level. So still no change. As long as this short-term pivotal resistance level holds 47,035, potentially there could be a recovery coming into play for the US Wall Street 30. First resistance level to watch will be 47,750. Above this level will be a test at the current all-time high at 48,450 next. 48,450 next in the days ahead. All right, so that's for the key levels to look out for on the three major US CFD stock indices that we cover on the frequent basis: the US Wall Street 30, the Nasdaq 100, and the S&P 500. Now, onward next will be the FX market. So as I mentioned, due to the fact that the ISM manufacturing PMI data came in weaker, and also its subcomponent, the manufacturing prices paid, and as well as the ISM manufacturing employment situation could also remains lackluster. That causes the US dollar to remains on a weaker state of affair. So the US dollar for the fourth one, two, three, four, five, one, two, three, fourth consecutive session yesterday, it managed to close below the 200-day and the 20-day moving average. So the 200-day moving average is this one here highlighted in orange. The 20-day moving average is the one here highlighted in a red. And yesterday bounced off from our first intermediate support level at the 99.25 level. But if you look at the hourly RSI, the daily RSI, pardon me, what I'm talking, so this is the daily chart of the US dollar index. So the RSI has shaped a bearish divergence prior to that on the 20th of November, where price action on the US dollar index got rejected at the upper limit of a key medium-term resistance level at 100.54, which is the upper limit of this complex sideways range configuration that has been in place since the low of 1st of July. So bearish divergence, and yesterday it did a bearish breakdown below this parallel ascending trend line over here, so indicating that downside momentum has started to creep back on the daily time frame chart. So this being a higher time frame chart, that means i.e. there's a higher probability that the US dollar index may float back towards the middle part of this range, with the next two key support level to watch at 98.66 followed by 98.03 level. All right, so the dollar index continues to remain on the weaker side of the story over here. So given that the dollar index going to remain weak, gold continues to remain firm. So if you look at the share price of the price action of gold yesterday continues to inch higher, almost hit our first resistance level at this 4,267 before doing that pullback in the entire US session. And what's interesting over here is that during the start of the Asia session today at 9 a.m. Singapore time, it managed to do a bullish bounce of it at the 4,190 level. So this will be the short-term pivotal support that is still intact, which I adjusted it slightly higher yesterday, continues to remain the same. So no change for that for gold right now at 4,190. First resistance level to watch will be 4,267, which was almost tested yesterday with an intraday high of 4,264. Above 4,267 potentially exposes the next intermediate resistance at 4,340, which is also close to the one-time Fibo extension on this ongoing recovery from the low of 28th of October, and as well as the minor congestion area here of 21st of October. So still remains bullish bias on gold, using 4,190 as the very clear key short-term pivotal support level, where we managed to see a bullish reversal candlestick and hourly hammer candlestick at the 9 a.m. mark Singapore time as we are speaking right now. All right, and over to Asia over here. So if you look at the Asia benchmark, Asia Pacific benchmark stock indices continues to have a positive price reaction despite yesterday's negative reaction from the US stock market. So Nikkei managed to up by 0.4%, the Hang Seng up 0.28% slightly, and the rest of the other Southeast Asia benchmark stock indices continues to bask in a bullish, rather limelight. The STI up by 0.09%, almost unchanged. The Indonesia up 0.4%. The AXX 200 is also up by 0.22%. So not a kind of a negative sell-off or a negative we call it reaction that the Asia Pacific benchmark index managed to actually escape from the negative fallout on the US stock market, where previously there's some news flow stating that the Bank of Japan may rise interest rates on the December meeting after BOJ UDA hawkish stance, which I mentioned yesterday, due to his remarks to a business forum. So if that would have a clear, what I call it, a major negative reaction across the global stock market, why do we see a positive reaction in the Asia Pacific benchmark stock indices instead? So that is not a, I don't see as a major downside catalyst if the BOJ does indeed hike rates in December. All right, so now onwards next to the second segment of today will be a more toned down version where I share with you two chart of the day. So the first chart of the day is more reaction to this ongoing positiveness in the Asia Pacific benchmark stock indices. Will be likely this risk on proxy of the Australia dollar over here. So the Aussie dollar continues to remains in a bullish trajectory. So the Aussie dollar will be my chart of the day today. So Aussie dollar managed to stage a bullish reaction of my first support level that I highlighted yesterday at 65.37. So using a slightly adjusted pivotal support for today. Yesterday it was at 0.6517. I push it up slightly to 0.6520, which is exactly the minor swing low of last Friday. So as long as 0.6520 holds, the Aussie dollar will continue to remain in this minor bullish upward trajectory since the challenge of it on the 200-day moving average on the 21st of November and the bullish reversal on the lower boundary of this key medium-term expanding wedge range support has been in play since 23rd of April 2025 low. Next two resistance level to watch will be 65.80, which is the minor swing high area of 30th of November, followed by 65.95/66 figure level, which is the minor congestion area over here of 30th of October. Okay, and also a key Fibo extension level in this ongoing recovery from the low of 21st of November. We'll check it up from the low of 25th of November, and that coincides very closely to the 3.618 Fibo extension level. Only a bearish breakdown below 65.20 that would invalidate the bullish bias view for the Aussie dollar. That's been our chart of the day to see a deeper pullback to retest the 20-day moving average at 65 level. Figure level, a breakdown below 65 figure level will trigger further weakness towards 64.85, maximum 64.67, which confluence with the key 200-day moving average. So that's for the Aussie dollar. And next up will be this ongoing optimism in this China-related AI play, where yesterday DeepSeek debuts its new AI models, and based on some independent research, it actually added a fresh capability to help combining reasoning and executing certain action autonomously. And the new version DeepSeek Dash V3.2 matches the performance of OpenAI flagship GPT-5 across multiple reasoning benchmark and combines human-like reasoning with the capability to use tools like search engine and calculators. So that create a bit of optimism back into the various China AI big tech stock play like Alibaba and Baidu. So what I could see over here is that one of my chart of the day that I will actually highlight to you guys will be the Hong Kong 33, because that is the closest that we have that have this AI China big tech component stock residing in certain in this Hang Seng index, which represent the Hang Seng index. So this Hong Kong 33 over here, in today's Asia session, it almost tested our resistance level at 26,310 before doing that minor pullback, hitting back close to our first support level at 26,0770 level, 26,045. So no change. Still, you watch that 25,840 short-term pivotal support level on the Hong Kong 33, representing the Hang Seng index. A clearance above 26,310 may expose the next intermediate resistance level at 26,695. Only a bearish breakdown below 25,840 will invalidate today's chart of the day bullish bias on the Hong Kong 33 that's representing the Hang Seng index to flow it down towards 25,410, maximum the key minor swing low area of 21st of November at 25,150. All right, so that's for the Hong Kong 33. Another chart of the day together with the Aussie dollar that I shared with you guys earlier on. So now we come to the last segment of the daily dose, will be what are the key data to look out for today's session. So with that, let us take a look at the economic calendar over here. Right, so today will be Tuesday. So today, key data to look out for will be the one of the key Japan forward-looking consumer confidence data for November. that will be out at 1 p.m. Singapore time. So market is expecting a continued improvement to 35.9 from 35.8. So that could influence the dollar yen, the yen crosses, and the Nikkei 225 index. Then following up will be at 6 p.m. Singapore time. You have the aggregate Eurozone inflation flash data. So this is a preliminary flash data for the month of November. So market participants will be focusing on the core inflation rate over here. So for the core inflation rate for November, market is expecting a slight uptick to 2.5% year-on-year from 2.5% year-on-year in the previous month, October. So if it came in within expectation or even above expectation at 2.6 to 2.7%, that could create a firmer euro dollar and also in line with the ongoing dollar weakness as I expressed to you guys earlier on the US dollar index. So that will be at 6 p.m. Singapore time. And next, we have one Federal Reserve official speaking before the before the Fed kickstart. The Fed has their monetary policy decision on 10th of December will be Fed Bowman. So I don't think she's allowed to speak anything related to the monetary policy, because given that we are now approaching 1 week before the FOMC decides on its interest rate policy on the 10th of December. So very unlikely her speech will be centered on monetary policy. So it could be some other stuff pertaining to the US financial system or whatever. So I don't think at 11 p.m. Fed Bowman speech will be related to monetary policy guidance, because they are not allowed to say anything related directly to monetary policy 1 week before the FOMC decides on the 10th of December. So this shouldn't be a market moving event. So there'll be at 11 p.m. Fed Bowman speech. So she should be speaking on some other stuff, yeah, not related to monetary policy. And yep, that's actually sum up today's Daily Dose of Market Insights. I'm Kelvin here, signing off. I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.